Hello ladies and gentlemen, welcome back to another episode on this Public Investment Portfolio playlist. I hope I have enough battery on my phone to make this episode, and if you follow this channel for quite some time you know that each month I contribute to this public portfolio. I'm fully transparent with what I'm doing. Sorry, I'm a bit dyslexic today. And this started as like a symbolic contribution. We were starting only with 40 euros per month. Right now we are contributing more or less 120 each month. And as time goes by, I started this almost 2 years ago. Hopefully I'll progress in my career and I'll be able to set aside more money so that I contribute to this investment portfolio. This has a really long-term horizon, and as always, it's not investment advice. Fully disclaimer, I have other portfolios that I don't disclaim here on the channel. I just find this as an entertaining way to share this with my friends, and in a few years where I can look back and rewatch these videos instead of looking some Excel spreadsheets and try to understand what was going through my mind. Maybe some of the decisions that I'm making today, they are good decisions, or maybe they are just terrible overall. Having that said, let's jump in the portfolio. I like to keep these videos fast-paced. I'll try to speak a bit slower because today I don't know what's happening to my speech. And here we are inside the Trading 212 app. Our portfolio value right now is 1,913. So today we'll reach the 2,000 if all the markets are open right now. And we have a total return of roughly 10%, 9.88%. You can see that we invested, or I invested from my pocket, 1,741 euros, and I have a total return of 170. So that means if I were to retire today, or if I wanted to seize this portfolio, I would have this return. Well, not amazing, also not bad. If I just set my money on the side, it would have lost its value to inflation, on this, especially in these past 2 years. So here we are. Probably if I haven't invested in the overall market, I'll be performing better, but that's a talk for a different episode. Let's see our positions, first in terms of weight and in terms of value. So as you can see, even in the start of this series, I always wanted to have a really solid foundation for this portfolio. The two main heavyweights on this category are the ETFs, the S&P 500 ETF and the information technology QDVE for those that are interested. So this represents roughly 50% of my portfolio, and I also have the Vanguard all world ETFs that represents another 5%. Then my heaviest stock here in portfolio, single stock, is Alphabet, Google, then it's Meta Platforms, former Facebook, Intel, Alibaba, Walt Disney, JD.com, and you can see here the distribution as I'm scrolling down. Let's see in terms of performance. You can see Alibaba is down 2%, so my Chinese exposure is not paying off. Google, fortunately, one of my heaviest positions, the single position is trading with a performance of 25%. So this is what's really impacting my 10% return overall. Farfetch is down, but Farfetch is only 27 euros of the 1,900, so that's not that much. It's like 50% down. This is really critical. If I had a risk tolerance that was a bit higher, maybe I would have invested more in this particular stock, and if it was performing well, good. But now that things are not looking so great, this is a sticky situation to be in. Intel is up, the S&P 500 ETF and information technology are also up, and these are the heavyweights of our portfolio, so this is what also justifying the 10% increase. JD.com is down 20%. Our Chinese exposure here, not great for this. Meta Platforms is also up 120%, and Pinduoduo up with 281%. I wish this was a bigger position in my portfolio, but this was just 4 euros. It's my smallest position ever. I just wanted to expose myself to more Chinese stocks, and maybe in retrospect that was a really good timing to have invested some money, but you never know. Hopefully, like in the long term, I'll invest when the market is up, and I'll also invest when the market is down, and it will average out, and I'll be having a nice return. But I guess you'll have to stick around to see it, if I continue to make these videos anyway, but I like to keep the consistency going. Tencent, more or less flat. Vanguard, all world, more or less flat. And Walt Disney, flat as well, minus 1%. But let's move on to our pies. So I created the first pie in January of 2022, and if I had invested all my money at that point in these particular holdings, I'll be down right now. Even Google is not performing, is not at all-time highs like it was on this January of 2022, and all of those positions are down. most of them. But if I had invested all my money in my portfolio, let's say, or the pie that I created in the December of the last year of 2022, I would be performing really well with over 30% in performance. Sorry, I just went back. And yeah, Google is 35% up since then. Meta platform is up 160% since then, and Farfetch is down 62%. But luckily, this was not. This was only 15% of my contribution back then. Only that's actually a big amount. But in retrospect, it's not that bad. So the only month that I didn't invest was in March of 2023, from what I'm seeing here, and because I thought the market was super overvalued. But as you can see, since then I've decided to contribute because I cannot afford to be on the sidelines anymore. And this is for consistency's sake, and we never know what's gonna be next. The Jerome Powell and the Federal Reserve just announced that the interest rates, they didn't hike the interest rates for the first time. So this is a really good sign for the markets. You never know when things will change. So I already created the pie for this month, and I'm already doing this almost in the second, November the 2nd, because I don't know how much free time I will have in this month. So my timings might be a bit weird, but this is the reality of it. Probably when I look back, oh, maybe if I haven't invested in the end of November, I'll be performing better. But this is when I have time to record these videos, and this is just my public portfolio. So anyway, here we are. So I'm gonna, let me see if I can add it. So it's much better this way. So 25% is going to ETF of the S&P 500, the information technology one, the focused one, and 20% is going to the entire one, the 500 biggest stocks in the S&P 500. And then we have Alibaba 15%, JD.com 15%. They were both down in my position, so I'm averaging down my entry cost on these positions because I believe in the future these will perform great. Maybe not, I guess only time will tell. Walt Disney 10%, the ETF for all world 10%, and then 5% on Tencent. So we have here a lot of Chinese exposure. It's going to be 30%, no, 35%. Yeah, Tencent is here, and Chinese stocks. So this is a bit much, but this is the only value that I'm seeing in the market right now. Maybe I'll be wrong, but we will see. So I'm going to invest here a total amount of 120. This is a bit slow. Okay, fund distribution by target, confirm. Oh, oops. Dun, sorry, I selected 10. Okay, by target you can see here Walt Disney 13 euros, Alibaba 19.5, JD.com the same, 26 for the S&P 500 ETF, and 32 for the information technology sector. You can see here the distribution. Back when I showed before, it was in percentages. Now it's in nominal terms with the amount that I'm contributing. So here we are. So I accidentally contributed, you probably noticed, 10 euros before, and then 120 here. So this was not the contribution that I wanted to make, but these things happen. I always do this in one take. So this was bound to happen someday. And we already invested 130 euros this month. So 10 euros extra than before. And our total portfolio right now is looking at 2,050 euros more or less. And of course our return has diminished a bit to 9.5% because this chunk just invested right now, the performance is pretty much flat unless something crashes or explodes in the next couple of minutes. But it's not going to have that much, 130 euros in 2,000, not going to have that much impact for the time being. So Alibaba, as you can see here now, is 1.7. It was 2% before because now we're contributing and this position is flattening more. And yeah, JD.com was 20 something, now it's only down 17%. So we are averaging down our positions. And yes, this is how the portfolio is looking. All the positions were executed. I'm filming this in my lunch break. And this is the total distribution as it stands at the time of this recording. I hope you all like these episodes. This time I took my time a bit more because I'm not as fluent in English today. I don't know what's happening. Maybe I'm a bit tired. I had to pull an all-nighter like 2 nights ago and I haven't recovered. My focus levels are a bit off, but that's the beauty of it. Sometimes you'll see me at my best, sometimes you'll see me at my worst, and we'll keep making these episodes as long as I can, or until I get bored, or I don't know. I'm rambling too much. I'll see you next time. Bye.